Hey guys, what's going on? So I came across this article on Seeking Alpha titled JEPI versus XYLD, which is best for income investors and retirees. Now, of course, these are two of the best income ETFs on the market, and I personally invest in both of them. So I went through this article, I highlighted some fun bits. I used the opportunity to refresh myself on JEPI and how it operates, and I came across a new document on their website. So we're going to take a dive into this as well, because it does kind of clear up a lot of the mystery behind the ETF. It's pretty insightful. Coming back to the article, it says both funds at a base level sell covered calls on their holdings to generate their high dividend yields. And XYLD at the current moment is higher at 11-ish%, and JEPI is around 9%. And in terms of their behavior, it says here that both funds tend to outperform during sideways market movements. And we could do a quick fact check on this. If you go year to date, we have XYLD in blue, JEPI in green, and the market in yellow. And during this rocky kind of sideways moving market, these funds have done better than the market. But it goes on to say that long term, because of the limiting nature of covered calls, the total returns do tend to lag behind the market. Now, even though both these funds sell covered calls to boost income, the strategy is quite different between the two. So XYLD sells at the money covered calls on all of the holdings in the S&P 500 on a monthly basis. And I can give you guys a quick visual example of what this strategy looks like visually. So this is a stock chart. You can see it's QYLD, but this operates the same as XYLD. So the blue line is the price of, in this example, XYLD, and this green line here is the call option. So what happens every month, that is the time period, a call option is written right at the money, so the current trading price. And because these are index call options, they can only be called at the end of the period. So essentially, if the price at the end of the month is higher than it was at the beginning, the buyer of the call option will exercise the right to buy this asset at the predetermined price, and that's how it limits your upside potential. But of course, in exchange for that, you get the premium that you collected in the beginning of the month by selling this call option, and that's your dividend payments. And at the money call options, because they're at the money, generate the highest income. So you can see that XYLD, the strategy here is pure income. There's no room for any capital appreciation whatsoever. And in contrast to that, JEPI operates a little bit differently. So this is a hybrid ETF. So around 80% of its assets are invested in low risk, low volatility US stocks. So that of course can go up and down freely with the rest of the market. And the remaining, 10, 20% is invested in leveraged equity linked notes, which are essentially fancy call options. On a fundamental level, ELNs do operate a little bit differently than call options, but the end result for you is pretty similar. And maybe that's why if you come to the official website of JEPI, they no longer mention ELNs directly on their site. And that's probably because it was a little bit confusing. And to give you a visual on this ETF, JEPI looks a little bit more like this. So it still has the options over here, but they're not quite at the money. In fact, it's more flexible than XYLD. It's not systematic, and the management has room to play when it comes to these options. But remember, this is only a small portion of the overall ETF when it comes to JEPI. And with that in mind, if we quickly come back to the article, in terms of income, XYLD is the clear winner. In terms of capital appreciation, JEPI is the clear winner. Hopefully you guys can understand why it's the case now. I like this bit here. It says in terms of risk, XYLD is the less risky option, and that's simply because this is systematic. So as we saw, XYLD, every single month they sell at the money call options, very systematic. But JEPI, the management could play around with where they sell the call options, and that could introduce potential areas for management to mess up. So the conclusion here, and I do agree with it, is that JEPI is stronger overall, but it is more risky. Now, when I was conducting further research to identify just how much more risky JEPI is, I came across this new document on their official website. And this is a welcome addition to see because JEPI used to be very opaque. It still is pretty opaque, but this does give you more insights on what management is thinking and doing. So right here, we can see a blurb on the actual fund managers if you want to read more about them. And then down here, they have a basic layout of their investment process. And this is new to me. So it says JEPI is a conservative equity solution comprised of two fundamental building blocks: a defensive equity portfolio of US large cap stocks, and a disciplined options overlay. So in terms of the equities, it doesn't really say too much about the process, but it's to find lower beta and lower volatility. But here it says the options are 1 month out of the money call options. So coming back to the visual aid, it should look something like this, how the call options are sold a little bit out of the money every single month. If we continue to scroll down, it says that JEPI is designed to provide distribution income through a combination of dividends and option premium. And right here, they lay out how much is from dividends and how much is from options. And again, I have not seen this information before on this website. This is a new addition, very welcome to see. And then finally down here, they show that the volatility is indeed lower. And here is a more broad view of their distributions. And again, it's split up between dividends and option income. So let us know in the comments down below which fund you prefer. Do you like Xyld and all these sister ETFs, or do you prefer JEPI and the new JEPQ, which is based around the NASDAQ 100? Let us know in the comments down below. If you're still watching and enjoyed, I appreciate a like. Go ahead and subscribe for future content, and I'll see you guys in the next one.